Hi guys, my name is Adheip. I'm the CMO and co-founder at Fabits. So my co-founder Ajath and I recently recorded a podcast. We're calling it The Finish Line. It's a little play on words, fin for finance, and finish line is supposed to represent people's goals like achieving financial freedom, retirement, buying a house, a car, whatever it may be. We recorded it a few months ago. As you'll see, it's our first episode, and you'll probably see it has a lot of first episode energy. There's a lot of room for improvement. We recorded with just two wireless mics in a room, me and my co-founder, and it was a fun time. It was a good conversation, and that's really why we want to post it. We wanted to do a more high production shoot, but this we felt was representative of the stage that we were in terms of everything that was going on. We had a lot of interesting conversations about how Fabits started, about what financial freedom means, about what some good habits are that people should follow, some common traps that investors that are early in their career face, and how to spot them early and avoid them. And it's just like super value packed. So we really hope you watch it, get through the bad quality, It's an interesting episode. We hope you enjoy it. And we promise the future episodes will be higher quality, better produced, better edited. But we wanted to put this out there to see what you guys think. So please enjoy it. Give us your feedback. We're looking forward to it. We're talking today about Fabits, about the vision, about financial independence, and then the future of Fabits.
Yep.
So, first of all, this is Ajath. He's the CEO of Fabits, running the ship, our captain, the captain of the ship.
No, we're all together in it.
So, first of all, I guess the most obvious question: Fabits. What does Fabits mean? What does it? Where did the name come from?
See, Fabits. I mean, the name itself says it all, right? It stands for financial habits. We strongly believe, and if you've heard Jay's conversations, he also talks about that building wealth, or all the things that you mentioned, financial freedom, working towards your goals, whatever those goals are. All that requires good habits, good financial habits. And that's what Fabits does, helps our customers build good financial habits that are in line with their life goals. And so the name Fabits.
So it's not about luck or people get rich quick.
I wish if there was everybody wants to get rich quick. Yeah. But unfortunately, sorry to disappoint you, there's no pill that you can swallow and get rich overnight. Yeah. The stories that you hear on several different platforms are one or two cases. There are a million other cases where get rich strategies do not work. Yeah. So to build wealth, you just have to have good financial habits. It's the same way you think of it as fitness habits, right? Everybody wants a six-pack. Everybody wants to run a marathon. You can't just go to the gym for a week and start looking for your abs. It's not there. Or you just run a few kilometers and decide to sign up for a marathon. It's just not going to happen. So it just, so think of it, right? Running a marathon, it's 42 kilometers. Seems like a daunting task. How are we going to do that? All you have to do is break it down into simple daily tasks. And when you break it down, you realize that it's just simple. Every day, wake up and work out, go for a run for 30, 40 minutes, an hour maybe. And a year and a half later, you would be, easily be able to do a marathon.
Yeah.
I mean, using the same analogy, it's the same thing with wealth building, right? You just have to stick to good financial habits. Figure out what are the good financial habits that work for you, and stick to it. And you will see over a period of time, before you know, your wealth has the goals that you plan for is easily achievable.
Yeah.
So it all comes down to good financial habits, and that's what Fabits is all about.
So, like, you think everyone can run a marathon if they train properly?
Absolutely. I mean, if you go back and see, using the same analogy, right? You go and see there are 60-year-olds running marathons. There are young people in their, early teens who are running marathons. So it's just about good training and good habits. Same with financial wealth building habits, right? We have got students who have started building their wealth when they're 18, right? They're investing small amounts of money, but that small amounts makes a huge difference when they're in their late 30s or 40s.
Yeah.
We have got people in their 60s who are trying to sort their finances out and trying to build wealth for their future goals, right? Yeah, wealth building financial habits is for everybody. It doesn't matter what age.
Takes time, takes discipline, but it's possible. So, why do you care about financial wellness, financial independence? What is your personal connection to this?
Oh, I have. So there's a lot of stories about uh, me and my money, right? So let me just give you a little bit my background. I'm an engineering graduate. So doesn't matter what you study, you'll see that a lot of this education that you get today does not talk about how to manage your own money. We have got a lot of MBA. I have an MBA as well. I've done MBA in finance. As a part of curriculum, we are taught how to analyze big, large companies, how to manage large companies. But somewhere along the way, they don't tell you how to manage your own money. So we have got a lot of MBAs, IIM grads as our customers who are done exceedingly well in their careers, but maybe not so well in managing their own personal money. So there's a lack of financial education in our systems. So when I graduated, the only good thing is my dad is a chartered accountant, so there's a little bit of finance that crept into me. So I started investing very early. That has worked really good for me. But very early, I fell prey for a lot of mis-selling, buying products that wasn't right for me. Just that I just didn't have enough knowledge. And there are a lot of people. I remember a relationship manager selling me a pension fund, which sounded very good on paper. But a year later, I realized that the only people who are making money is the bank and the relationship manager, and there was nothing for me. Yeah. And probably that product was not for me. Yeah. At the age I was at. You learn that I learned about that a year later. By then it was too late. I had signed into this. I had to contribute for the next couple of years before I could get out. That happened. Then I said, okay, you know what? I will do it on my own. Then I had to learn everything on my own, and that has its own gaps and fell prey to a few other things. 2009 crisis. I remember 2006, 2005 was great, decent bull markets. I saw some great returns on my equity investing, so I went all in with my equity. 2009, I was doing my graduation program in the US, and I had a lot of investments in India. All of that took a beating. My portfolio was down 50%.
Oh God.
That's when I realized that the importance of diversification, investments into debt, gold, international equity. So I have learned a lot of these things the hard way. And even for me, after my MBA education and having so much experience in finance, I find finance overwhelming. There are so many different products. Today, there are about 2,500 mutual funds, right? And every day, if you open the newspaper, there's something new being launched. So, how do you figure out what's the right thing for you, right? I still struggle, in spite of having so much knowledge. Then I go back and look at my sister, my wife, and my friends who haven't had the same journey as I have had, and they are struggling as well. So, Fabits was built in making sure that we put first the customer in the center and focus on the customer and try to tell the customer what is the right thing that they have to be doing in securing their goal, their wealth, their future. So just, my own experience with money and learning a few tricks the hard way. With Fabits, we are saying that you can learn faster, you can grow your wealth faster, and you can help build those financial habits. You don't have to go through the entire process that I went through. We will help you get there. The entire process that I went through. We will help you get there.
Yeah. And these, I guess, the tricks and these bad financial products that are sold to people, is that still an issue now? And like, just like quick for our listeners, what are some ways that they can spot these and avoid these early on?
No, it's still, and it's just gotten worse. There are so many complex products today, and it's easy to sell. So let me give you a few examples. There are what is called as endowment policies. There's something called pension policies. These policies, what they do is they mix insurance with investments, and they give you this perception, or at least on paper, that you're going to earn a lot of money and you'll be covered. Your term insurance, in case of death, or in case of some critical illness, your family is taken care. So you're like, oh, that's a great product. Now I've got both insurance coverage as well as investments. But if you scratch the surface and you go into the details, you realize that neither are you getting good insurance coverage, neither will your investments perform well. So never mix two things. Keep your insurance separate. Better to buy a simple term insurance, pay for it, you'll never get the money back. Great, right? And keep your investments separate. You'll significantly benefit. Your investments will grow at a much higher rate of return, and you and your family will be safeguarded with the simple term insurance or medical insurance policies that you have. Two, most investments should not have a lock-in period, except for the equity linked savings schemes. That's the tax benefits scheme, ELSS schemes, which has a 3-year lock-in period. Most investment schemes do not have a lock-in. So if you have a long lock-in period where they say, oh, you have to contribute for next 10 years and then we will pay you back after that period, again, it should be a red flag. Then you should go back and look at what is that you're getting out of those policies. So anything that's not simple, that you can't understand, beware of it, and don't just go by what is shown on paper. The other one would be thematic funds. They'll say, as we speak right now, the last year defense, PSU funds, real estate funds have done incredibly well. This year, mutual fund houses have released a lot of mutual funds in that particular segment, in those themes. And it's easier to sell it to a customer. See, hey, last year, this particular fund has done 70%, indicating that would continue. But more often than not, those funds fizzle out very quickly, and we are already seeing that. So don't fall prey to that. Keep your investment simple. If something that you don't understand, don't invest in it.
Cool. Awesome. So if there seems to be smoke and mirrors and like something that's too good to be true, stop, do the math. If you don't know how to do the math, ask someone who knows how to do the math, and then take the right step.
You bring another point, right? If it's too good to be true, if it's too good to be true, you make 30% returns or 44% returns, right? I'll tell you what, if that's the case, the individuals who are selling it should be investing, and they would be really, really rich, and they would need to sell those products to you. There is no easy way or quick way of making money, and you should be extra cautious, and especially when you see this get rich schemes or very high return schemes that are sold to you.
Cool. Awesome. Thank you. So what makes Fabits more than just another finance app? So we're talking about financial habits. Are those like really, how easy are they to inculcate in a user, and what makes Fabits different from what's out there?
Okay, so first thing is Fabits is not an app. Right? We do have an app. We have both iOS and Android and a web app as well. But we believe it's not an app. We strongly believe that we are a service-oriented company. We are a human-first company, and app and the tech and the deep tech, the algorithms that's behind the scenes help us with monitoring the customers' investments, making the required changes. So we're a human-first company enabled by tech, right? So when you compare some of the other investments apps, I I don't think when you come on board yourself with Fabits, you'll realize that we don't let you invest right away. The first thing that you have to do is talk to us. Tell us who you are. What is that you're looking for? What are your goals? And then we will tell you what are the things that you can do on the product. Right? Then the kind of product takes over and helps you track your goals. How well are your investments doing as per the plan? How close are you to your goals? Is there any tweaks that has to be done in your portfolio at an individual level? Right? All of that is kind of done by the app. See, when it comes to personal finance, it's all about trust and relationship building. And we focus a lot more on that. Relationship building does not happen over an app, it happens with human to human interactions. So when you come to us, when you get started, you'll be talking to us. Along the way, there will be a lot of interaction points with our team, and that builds trust. App and technology does not solve all the problems that individual has. Humans do, and we believe in putting humans ahead of tech.
True. And I guess this goes back to the belief that the money problems that people have, or like goals about money, these are a lot more about emotions than about mathematics, right?
Absolutely right. You're bang on the money. Every individual is different. My goals are different. My relationship with money is different. There's a lot of emotional aspect to it. You can't just go by Excel spreadsheets and the math and percentages, right? That doesn't work. What we do is we bring the math side to it, the percentage side to it. What the customers bring is the emotional side. We combine these two and find something that works for that individual that might not work with somebody for somebody else. Right? We need to find that sweet spot for each individual. And like I said, we are trying to make personal finance truly personal and simple.
Great. So you talk about emotions and like people's goals. So I guess one way to like encapsulate everyone's goals is financial freedom, right? And that means something different for each person. What's your vision of what financial freedom means? And what do you see for other people? Like when people say they want to be financially free, do you think it's an achievable goal? How should they redefine it? What does it mean?
See, for me, financial freedom is waking up and not worrying about money, right? Um, Not worrying about money in terms of taking care of my goals, my family goals, my retirement, uh, uh, and not having to make decisions based on money. I mean, I could think of it as I wake up and decide not to go to work. I said,
Yeah.
I've had enough. I can relax, which I'm not going to do it, but I love what I do. But if I want to, I should be able to do it. Right? That is for me. That's financial freedom, and I think it's different for each individual. My wife says, as long as she's taking 3 vacations in a year, 4 vacations in a year, and adding a little bit more furniture or replacing furniture in our home makes her happy, and that she calls, if she has a freedom to do that, she calls that financial freedom. So for each individual, it's different, but doesn't matter what your goals are, right? Like I said, having a plan, having a blueprint of your life ahead. Just think of constructing a home. You always have a plan. You have a blueprint of your home. You know how it looks like even before you built it.
Yeah.
Then you go build it brick by brick. You know how much it costs, how much you have to put aside, what tiles, what fixtures, everything. You kind of decide along the way. Same thing. You need to have a blueprint of the life ahead. How do you see yourself when you're in your 40s, 50s, 60s? Can you start building for that today? When you have the blueprint, things become very clear. How much do you save for your retirement? How much do you save for buying that, I don't know, Mercedes Benz? How much do you save for sending your kids to one of the top universities in the US? So that kind of brings a lot more what you have to do. That brings clarity on what you have to do today and how much you have to save today. And when you do that, it's easily achievable. You can easily achieve your goals. What I find is there are two kinds of people usually. One, when you don't have a blueprint, right? You're always constantly worrying about the future. I talk to a lot of parents. They were always worried about what is going to happen to their kids. Am I earning enough? Am I putting aside enough? Education costs are going high. Um, are we doing enough for my kids? Can I send them to the top universities? Can they send them abroad? There's a lot of concerns. It's just that they don't have a blueprint. And there's the other kind who say, let me see what happens tomorrow.
Go with the flow.
Go with the flow. I will enjoy my life today. I'll figure out tomorrow. Both these approaches are not right, I would say. You need a balance somewhere between, right? When you have a blueprint, you can figure out, hey, this is what I have to do to secure my child's future. This is what I have to do to secure my retirement or to buy that Mercedes Benz. Once you do all of that, then you say, I'm doing all of that. Might as well enjoy my life today.
Yeah.
Why am I constantly worrying about the future? So you have a blueprint, you figured it out, you know what you've done. If you're doing it, you'll start enjoying today.
And I think the planning part of it unlocks a level of freedom today, which I've noticed in myself, or my friends, where there's people who have enough money saved up, but they don't know if it's enough. They just have the money and they're like, I don't know, I need more. They're constantly in the mindset of like, I need to save more, save more. But when you put it in the structure of a plan and say, look, you actually have more than enough for where you are now, just keep doing what you're doing and you're fine. The stress of like the money part actually reduces, and you're immediately like, once you just know that, it unlocks this level of freedom where you're like, oh, I can actually buy a side of guacamole with my chips. I don't need to like cheap out on these small things. Or like those small things that you like tell yourself that I can't, I shouldn't do this, I should save this money. You start unlocking that and like living a freer life today.
Absolutely. I mean, see, most people, when customers come, one thing I ask, and I say, how much do you think you should have for your retirement? They don't have a number, and more often than not, either the number is too small or too high. They say I need to have 20 crores. And when I tell them that all you need is about 6-7 crores to kind of comfortably retire, they're not sure, right? Because they've not done the math, right? And the math is complex as well, to be honest with you. The math is not simple to say what is a number that what is the corpus that you should have, or the money that you should accumulate to retire. Something that people struggle with, and when we tell them when we tell them this is the amount, they're surprised. And like you said, it just opens up. See, we today talk about a lot about mental health, mental wellness, and finance play a big role in it.
Yeah.
When you take care of, like I said, build good financial habits, one aspect of that mental wellness is taken care.
Yeah.
And that's a big aspect of it. It doesn't matter who you are.
True. And then you're just that much closer to feeling free. Because I don't think people can have a goal number. Maybe, okay, correct me if I'm wrong. So if people have a goal number, let's say I want to have 3 crores saved up for my retirement because I spend like 20,000 rupees a month, like I don't need more money. But when you get to that 3 crores, you're like, wait, I'm still young. I'm like 40. I can still work. And if I had like 4 crores, that wouldn't be so bad. So they keep working. When they get to 4 crores, they're like, maybe I can do 6 crores and live a like even fancier life. So people have like they reach the destination, they look at the horizon and say, oh wait, I can go even further. So what do you like say to that? Where like having one number isn't the actual it doesn't work. It's more like having a structure and a plan and moving towards the future.
I think you bring up a great point, right? So when we say blueprint and plan, right, we also notice that life evolves and life changes. Your own goals change over a period of time. So all you do is change the plan accordingly.
Yeah.
Right. So this plan that you've set when you say you're in your 20s, you've set a financial plan, you've set a blueprint of your life ahead. You'll see that we've seen that that by the time you get to late 20s, early 30s, plan changes a bit. You get married, you have kids, priorities change, those plans, your goals change. That is where a financial plan is of crucial. This is not like building home, right? Once you've built, you can't break it down. Here, the blueprint can change.
Keeps evolving.
The financial plan will change based on how life evolves, how your goals evolve. And that flexibility is, again, very crucial and gives you the freedom. Like you said, when you get to a certain milestone, you want to do something else, let's build a plan for that, or let's change your existing plan so that we realign to your goals. I'll tell you, goals change, right? When we talk to a lot of young people, all they want to do is probably go on vacations, travel a lot. That is their top priority. Maybe buy gadgets. iPhone is, you've seen a lot of youngsters planning to buy an iPhone, which is all fine. Late 20s, 30s, once they get married, they're looking to buy a home. Home becomes a top priority, right? Now travel takes a back seat. When you have kids, coming from an Indian family, kids' education, their wedding, and taking care of them becomes top priority. So life evolves, it changes, the plan changes, your investments or what you do with your investments change, and that's what we do at Fabits, making sure that as your life evolves, as your goals change, we also make sure that your investments at all points of time is aligned to your changing goals.
Evolve with you, yeah. So it's kind of like when people say the journey is more important than the destination. This is the financial version, where the plan is more important than the goal.
I mean, absolutely right. That's where Fabits plays a greater role, right? It's not about getting you started, right? Hand holding you throughout the journey. We know that the journey is longer than the destination, right? And it is, the journey has to be nice and smooth,
and
right?
Peace of mind,
right? And that is where Fabits plays a greater role. A lot of our customers have a lot of queries during that journey phase, right? Hey, something happened. Can I stop my investments? Can I restart it? Yes, the flexibility is there. How does it impact? We know how it impacts. What they have to do to come back on course to start chasing these goals. Everybody is different. Everybody's journey is different, and just supporting them, being there with them along the journey is critical. The other thing that we do with customers is educate them on basics of finance, on where their money is going, what kind of asset classes have we invested in, what is the reasoning behind that, and we do it. I mean, we don't overwhelm the customer, because like I said, finance is sometimes overwhelming. But every now and then we do a lot of videos, we do a lot of blogs. When they read or listen to us, they kind of understand the basics of finance, basics of personal finance, basics of where their investments are going, and that in itself is provides that peace of mind. Saying that, knowing that your money is invested in the right assets and you don't have to worry about it, so you get a good night's sleep and not having to worry about markets ups and downs, and just focus on life and enjoy your present.
Yeah, cool. Okay, cool. So while building Fabits, what's one unexpected thing that you learned in this journey so far?
See, we have a lot of tech behind the scenes, and like I said, Fabits believes in customizing the journey, and ensuring that personal finance is truly personalized to individual goals aligned. That tech itself, we keep saying that, oh, we are done with tech, I think we are good, and we interact with customers and we realize something more, and then we go back and tweak that tech to kind of so every time we have discussions behind the scenes with my tech teams, I say, okay, this is it. I think you nailed the algorithms, and I got every possible scenario taken care. There's always something new that we learn. So Fabits itself and the tech behind the scenes is evolving, and like I said, there are a lot of finance apps apps out there, wherein really good apps, but decision is yours. You have to go and figure out what you have to do on the app. What we have done is build a lot of intelligence, saying that, hey, come, just tell us a little bit about you. We will customize that investment vehicle for you, aligned for your goals. So the tech has continues to evolve, and I think as it evolves, it benefits. That has the tech has the algorithms, the deep tech, the tracking has been quite challenging. The other thing I would say is simplification. Finance inherently, right, has a lot of jargons, a lot of numbers. How do we break it down and simplify in a way that anybody can understand what money is doing for them and what they're doing with that money? So that simplification bit is very has been very difficult. So with me coming from a lot of us coming from a financial backgrounds, we sometimes think certain words that we use, certain jargons that we use is understood by all. Unfortunately, that's not the case. So breaking those financial terms, breaking this into simple language, that's been challenging. And so what we've done is we've kind of roped in a lot of our customers, and we talk to a lot of people who are not well versed with finance. And if they understand what we are saying, if they understand the app and get their feedback, and we rely less on financially savvy individuals in building the product.
Yeah. So again, making the product address people's emotions more than the financial part of building money. Yeah, that's the challenge, and I think that's what's missing in the finance space in India, where everyone talks about returns and like cheap trades and like invest in these mutual funds, and it becomes so complicated that people can get taken advantage of pretty easily and feel like there's still so much fear around investing in the stock market, and that's why these traditional products like fixed deposits and gold and these saving vehicles seem more attractive because of all of that. So yeah, I get that's the challenge, is like making equity investing and diversification easy to both understand and emotionally rely on, as like this is a safe alternative.
Yeah. I mean, see, you talk about FDs. Why? I mean, a lot of people that we speak to have a lot of FDs, and they say, I understand I'm getting less returns, but it's safe and secure, and I trust the bank, or I trust my relationship manager, and these people are bombarded with a lot of apps today, a lot of really good apps. But when you open any of these apps, right, there are so many icons, so many things to do, and it's so overwhelming. At the end of it, it's a very tiring process.
Yeah.
And if you're not an active investor or a financially savvy investor, you're overwhelmed and you're like, better I keep my money in an FD. I understand that at the end of it, why do people invest in FDs? At the end of it, you get an X percentage, an X amount. I'm sure about it. Simple. I like it. We want to bring those concepts on Fabits, right?
Yeah.
When we sell, we tell people that we don't sell saying that, oh, you get X percentage, or it's easy to. It's all of that. That's what the most of the tools, most of the apps that market you. There's a 3 seconds execution, 2 seconds execution. Well, you can invest in 10 different asset classes. All of these are product features.
Yeah.
What we focus is on service. How do we help you achieve your goals?
Yeah.
Right. Tech is just a facilitator for us. Yeah. It is still all about you, and it's all about building relationship and trust with our customers.
It's tech and even the products, right? Like a lot of these platforms boast like, we do IPOs, we do mutual funds, we do equities, we do futures, we do options, we do like intraday, we do like all of these things that people are like, okay, what should I do? Like you do all of this, but how do I like start? Like what's the first step I should take? Like that, I think overwhelms people. And while we offer all of these, we try to make it super easy for someone who doesn't know anything to start. Like you go on the app, you'll notice that we don't like push these products on you. We're just trying to get you to take that first step, which is the most difficult part.
Absolutely right. I mean, a lot of these companies talk about their offering. Yeah. Ultimately, you're wondering what is there for me, and how do I do? What should I do? Right? Again, one size fits all kind of approach with most finance apps. Here we're saying that no, it's about you. What is that you want to do?
Yeah.
And we've got all of those product offering, like you mentioned. All of them is available on the platform. We open one layer at a time, depending on who the customer is and what they want from us.
Yeah.
So that makes it much more easier. So we can address the entire spectrum of audience. Somebody who's never invested, who has no clue about equity investing, debt investing, who has no clue about that, we are able to address that individual. And at the other end of the spectrum, who's an active investor who wants to do 10 different things, we have that as well. Yeah. So we kind of address a large spectrum, but still customizing it based on who you are, how much knowledge you have, what you want to do on the product.
Yeah, I think of it kind of like a lobby of a five-star hotel. You go there and it's like relaxing. They obviously have hotel rooms, they have restaurants, they have a business center, they have a gym, like they have probably all of these things. But you enter the lobby and you're like, okay, let me just chill here. Someone comes to you and is like, what do you want? Your room is ready. Are you hungry? Are you like sleepy? What do you want to do? We'll like guide you the right way. And then it's up to you. Once you're checked in, you can like slowly start peeling the layers of the onion, exploring and all of that.
Lovely analogy. I like that.
Right?
We should use that somewhere.
We should use that. And it's like play on the service part as well, because we want to be that like five-star hotel service for people. So
absolutely bang on. I think that explains us when you come in. It's just that feel that we want our customers to experience.
Yeah.
You can still go and do what you want, but there is a human interface. There are people available at all points in your journey while you explore.
Yeah. And you're in the room and you're like, I'm hungry. I want to do more. You just call them up and say, dude, help me. I'm hungry. So yeah, great. Like you're invested in a really safe thing and you get like a influx of money and you say, hey, I got a bonus. What should I do with this? Yeah. Should I spend it on a car or should I invest in something? So we help you through that. So yeah, I think that's a good analogy. We'll use it.
Yeah, we have to use it.
Cool. So you spoke about risk and returns a little bit and like how people think about it. Like people have fixed deposits. They know it's a lower return, but they're happy with it. But then the same people can come and be like, hey, if you're investing in equities, like 12, 15%, can we do more? Can we get more aggressive? So what's going on? Like, how do people think about risk and how should they be approaching returns as a result of their risk?
See, risk is a word that's thrown around, but hardly understood by many, right? I mean, it's a very, very complex word in itself. So we focus less on the risk and we focus more on the individual. A lot of them are, when they come to us, a lot of our customers are risk covers. When I may say risk covers, like you said, they're mostly invested in FDs. They kind of have outsourced their decision making in terms of investment to some other individual in the family or a relationship manager at the bank, because they just trust and they don't have confidence in themselves. When we talk to them, we just don't throw them at the deep end of the pool and say they're young and you need to start taking more risk and just throw them at the deep end of the pool. Now figure out how to swim. We believe that we have to evolve as an individual, and then, like I said, most of them are risk averse because they don't have enough knowledge about it.
Yeah,
it's true for anything, right? If you don't know how deep the pool is, you might be hesitant to get in. If you find out that it's just 2 feet deep, everybody's jumping in. So, or it could be a 6 feet deep pool, but if you are confident how to swim, you're going to jump in. You're not worrying about it. So it's a process. It's a process. So what we do with our customers is when they come, we figure out where they are in terms of their financial knowledge, in terms of that's why we have the education side of it, wherein we tell people where is the money going, what is equity markets, what is debt investing, how do we invest in gold. All of these elements kind of add up as they become financially more literate, those individuals we've seen become more risk seeking. When I say more risk seeking, they kind of invest in various asset classes, such as equity, international equity, which is a little more volatile in the short term. And they have a more appetite because now they have a vision of, or they have the knowledge of how these asset classes work. So it's not at Fabits, it's not just about saying that I know best for you, but also equipping that individual with enough knowledge to make them believe that what they are doing with Fabits is the right thing for you. So that helps, and then then people, once they have accumulated enough knowledge, they become financially literate. They come back to us and be like, I want to be more risk seeking. I want to go all equity. That's the other problem that we have. They come back and say, we want to be all equity, and I go back and tell them my example I did early, right? 2007, 2008, I had all equity because I was like them, saying that, hey, I'm young, I should be all equity, gives you long-term returns, are very healthy if you look at historic returns, then I should go all in. 2009 crisis, portfolio is down 50% and I'm crying, right? So that is where the importance of diversification comes. Everybody talks about diversification, execution of these strategies are the most complex thing to do. And that's where Fabits comes into play, saying that, hey, while we evolve with you, your investments involved with you, we'll still make sure that your portfolio is diversified. Leave that math, leave the execution bit to us. We will take care of those elements. You just focus on those good habits, sticking to your SIP, planning your goals. As life evolves, come and change your plans. Stick to those habits and leave the rest to us, and we will help you execute.
Great. So that actually brings me to my next question of like financial habits we talk about. What are some good financial habits that everyone should have, whether they're with Fabits or just on their own, and like how can they take that first step to building these?
So going back to the habits, right? The first thing that you need to start now. The best time to have started is when you started working. If you didn't do it, the next best time is now. Don't worry about the markets. Don't worry about where the economies are. Just start now. 2, learn a little bit about investing. If you do not have time, or finance as a subject is not appealing to you, or finance is overwhelming to you, find a good advisor. The value an advisor brings to you is going to be significant. Don't have to be like a Google doctor. Don't keep Googling everything. If there's a reason why you have a doctor, I equate financial advisors to doctors. They know what you need, what has to be done to make sure that your wealth and your goals are taken care. So find a good advisor who can stay with you. Don't tell me, a lot of people say I've got a relationship manager at the bank. No, they keep changing every 2 years. They don't really have the best interest of the client. So find an advisor who has got the best interest in you. Do a little bit of research on the company or the advisor themselves. 3, don't look at come and don't say, a lot of customers come and say, which is the mutual fund I should invest in, which will give you maximum returns. I'll say step back and say, what is that you want to achieve in your life? So plan your goals. Have some goals in life. It can be anything, right? Like I said, travel, buying a car, retirement, kids' education. Just have goals. Then design your portfolios based on each of those goals. Bucket your investments based on the goals. So tomorrow, if for instance, I need to I have planned for a car, and it's time to buy a car, I know which portfolio I have to sell to go and buy the car. For my kids' education, I know which portfolio I have to liquidate to go and buy a car. More often than not, I see people liquidate assets that's well aligned with their retirement to go and address some emergency. So have goals, bucket your goals, and align your investments to those goals. Last, stick to your SIPs. SIPs are monthly investments, systematic investment plan. Those are your monthly investment. Stick to it. If you have a financial plan, stick to the plan no matter what happens in the markets. Markets going up and down is part and parcel. It's actually healthy. That's how these asset classes work. But from your perspective, you just stick to that plan, stick to that SIP, no matter what.
Yeah, and I think the bucketing is really important to manage the like risk versus return thing that we're talking about, where things that are more long-term goals, you can take a little bit higher risk and the up and down shouldn't matter as much to you. But if you need some, let's say your kids are going to college in 2 years, you can't put it in a super risky fund because in 2 years you don't know what's going to happen. So you know that the 2 year one is at a lesser risk profile, but it stays safer because you know you might need that money very soon. And I think that gives people peace of mind too that, okay, this money that I need is safe. It's not like my whole portfolio is going up and down all the time. This money that I need is safe. The money that I need 10 years from now is down a little bit, but in 10 years it'll recover and be fine.
Absolutely. I mean, that you bring up a great point. Just aligning your investments to your goals, the time frame that you have, the nature of those goals, and that's exactly what that Fabits we believe in. Making sure that that's where even before we suggest anything, you always learn what is that the customer want, what are their goals, what are their immediate goals, what their midterm goals, what their long term goals. Then we kind of decide what that vehicle that is best aligned to those goals. And yeah, I mean, like once you once you create a blueprint, the financial plan, investing becomes a lot more easy. Choosing the right vehicle for those goals become a lot easier. Um, so it's a trend that's picking up in India. A lot of goal-based investing is something new, and Fabits is one of the first companies to have done something in this space. But I'm sure goal-based investing is something that is going to become very popular. It's already become popular in US and Europe. It's just a matter of time before people in India stop investing ad hoc, random. Somebody said there's a good mutual fund. Somebody said gold is a good investment. And you do random ad hoc investments. You'll see that there'll be a lot more structure in how people are going to invest going forward. We've already helped customers get there with Fabits.
Yeah. So as you see this goal-based investing become a more mainstream thing in India, what is your vision for where you want Fabits and our customers to be in, let's say, 5 years from now?
See, we want, like I said, our tagline says stress free, right? We want our customers to be stress free when it comes to personal finance. I'm talking about investing, taxation, insurance. They should worry less about money and enjoy life more. Uh, our goal is to make sure that we at least 1 lakh customers are financially free in the next 5 years.
Great. That's a healthy goal.
That's a healthy. That's a goal. We would like to make a difference in the way people live life today and tomorrow, and being part of the journey as they achieve their financial independence is quite satisfying and rewarding for us as well.
Awesome. I guess last question. What's one key takeaway? If for anyone watching this podcast, they've heard about like risk, reward, financial freedom, independence, planning, start now. So, what's one key takeaway if like someone who doesn't know anything much about personal finance wants to take one step today? What should they do?
First, the only thing they should be doing is checking out what Fabits does and how we can impact them. I mean, I'm not just saying this from a sales pitch perspective, but I think Fabits can make a huge difference. Our personalized approach, our human first approach, while enabled with tech, I think that differentiates us from various different finance companies out there. If you're somebody who doesn't know after listening to us, even in spite of that, you don't know where to start or what to do, the one thing that you should be checking out is our website fabits.com, or just give us a call. We would be happy to talk to us. happy to talk to us, even if you do not want to invest with us, and we would like to help you in whatever way possible. Besides Fabits, I think take control of your finances. I see a lot of people delay, right? I mean, say when you want to start investing, I'll do it next month, 6 months from now. Oh, I'm changing my job, so I'll start once I switch, or I'm buying something, so I'll do. So there are several reasons for not starting today. Put aside those reasons, take action. A lot of people are still in the planning phase, not the execution phase. Execute. We believe just dive in and
And start with as little as you can.
Yes, start obviously. I mean, on our platform, you can start as low as 12 rupees. Right?
Yeah.
We've got what students who invest about 500 rupees a month,
Yeah.
and at the other end, we've got people who are investing 10, 15 lakhs a month as well. So we have a big spectrum. So investing, there is a perception that for investing you need a lot of money.
Yeah.
That is not true. You can start, really low, learn a few tricks and trades and how investing works. So again, a low risk environment, if you're investing 1,000 rupees a month, you figure out. And there's nothing to lose, right? 1,000 rupees. So you'll figure out what is right for you, and build on that, and increase that contribution as you feel confident.
Yeah.
And on that note, I will also tell that if you have kids, get them started early. Give them some money to kind of go and invest on their own. Let them learn what investing is all about early. When you do that, I mean, you've kind of taken care a big aspect of their life, that is money and financial freedom.
True. Awesome. I think that's all that I have. It was a great, quick episode about Fabits, about your life, your journey, about how people should think about money. So hope that was helpful, and we hope to do a lot more of these. So stay tuned.
Yeah, thanks. I think this was a lovely session. We haven't done this, but
Yeah.
happy to have finally
Yeah,
this.
and I learned a little bit about you and like how you got connected to this journey. So yeah, this was fun.
Good. So so our audience will get to see more of these, and super excited how this will go from here.
Yeah.
Thanks again, Adheip.
Thank you. Cool.
Thanks.